We often hear that the gold market is manipulated by paper gold. And I've seen some commentary regarding there isn't enough gold to support all the paper gold claims. I mean, I don't know about this myself. I'm sure it's something you've looked at. I think something we would possibly therefore care about is paper Bitcoin and claims to paper Bitcoin. And is there a chance that Bitcoin could be manipulated in the same way? I'm not sure if there's something you've looked at all. Is it something we should be concerned about?
I think it's something to watch. And so, yeah, basically, when it relates to gold, the paper market is quite large relative to the physical market. And so, one thing, for example, that you see during these big price movements is that often, like so let's say in March 2020, right? So we had a big sell-off across the board. Gold fell. The paper gold price fell. But if you actually were buying gold coins, they either stayed the same or got more expensive, and were actually hard to find. And so, if you wanted to get gold in your hand in a week, that price didn't go down. Whereas if you want to buy a gold ETF or buy gold futures, where you cannot redeem it, or at least it's very challenging. They basically purposely make it hard to redeem it. So some ETFs you can't redeem it at all. Futures you can, but it's kind of like the exception to the rule, right? So it's like this long process to actually go through it and do it. And so those paper markets are meant to make it more efficient, but they also means that more people can have exposure to gold or think they have exposure to gold than they actually do. So it's one of those things where it's like musical chairs, where if everybody demanded physical gold at the same time, there's not enough gold for that all to happen at the same time. And so that has expanded, basically you have that flexible supply to meet that perceived demand. And then most people are satisfied with that they think they hold gold. And it's one of those things where, most decades that works, but there have been periods in history where like a gold pool can fail because, everybody kind of demands it at the same time. Now with Bitcoin, it's easier to settle, right? So you don't have the transportation cost, you don't have the auditing uncertainties of proving a bar is real, and so because Bitcoin has that technology that allows it to transmit more, there's less of a reason to have it to be so centralized, and there's less friction that kind of dissuades people from being able to do that approach. And so as it relates now, the paper market is a smaller percentage of Bitcoin's market capitalization than is the case for gold, and so that's something to monitor to kind of see that continues to play out, or if it becomes more and more paperized, for lack of a better word.
I'm going to quote you here. Just took something from your report. Interestingly, Bitcoin both broke out and broke down since then, which was somewhat expected. You set two different price ranges. I guess because we're in a bull market, your expectation is that we would break out, but if we didn't break out, then perhaps support would fall. But we've been through both. My view is a little bit slightly different. I've been watching these liquidation events with interest because I follow one of the bot alerts that alerts you at the point where there's a liquidation event. At some points, my Twitter feed is completely overtaken by these alerts. Like, it's incredible the amount of liquidations happening. And I'm just wondering, is there potentially too much leverage? Is there too many people trading with too much leverage and too much risk in the system? And that's making it easy pickings for those who can move against them or counter trade them.
Yeah, and so going back to that point about the breakout or breakdown, basically we were watching this kind of Bitcoin consolidation play out, and so if you start making lower lows, that's not good for kind of the technical signal. You obviously want to start making higher highs, and so there are certain kind of points I was watching, and I was like, okay, if it breaks below this level, that's a little bit concerning. If it breaks above this level, that's great. My base case is it would break out, and then the funny thing that happened was it broke out. And then it broke, and then it went below the range, and so I was like, this is actually a mixed signal here. We have to keep watching this. And so one of the risks to watch out for is that during the 2013 that kind of previous bull market, the one two bull markets ago, you had that kind of double cycle. Anyone who looks at that long-term log chart, you had a big blow off top, then you had a really deep and long correction, then you had another one. And so the question of this cycle is it going to look like 2017, where it kind of just keeps going up with 30% corrections, or is it going to have a much weirder kind of pattern where it goes up and then it has like a 6 month or longer kind of big correction? And just because we have investors that are price sensitive and kind of they don't want to have a big drawdown, it's just kind of useful to watch that and see what's happening. And obviously different people have different characteristics for how they want to trade it or hodl it, and so you can have like a strategic holding, but then also you want to focus on what the tactical price is likely to do over, say, a 6 to 12 month period. And so I just track that for readers to basically see how does this asset class compare to what other asset classes are, what are the risks, how bullish are we with, say, a 6 month view compared to the long term view. Generally, what we saw with this latest liquidation was mostly good news in the sense that we cleared out some of the leverage, and it bounced off of kind of those areas we'd want to see it bounce, like where there's those metrics that determine like the SOPR, like that ratio. I still remain bullish on Bitcoin in a tactical sense, let alone that longer term sense. But there's certain levels to watch to make sure that thesis kind of stays intact. And I think these inflationary base effects and things like that over this next quarter are likely to be beneficial for the protocol and for prices in general. I think as you get later this year, there are some challenges related to potentially broad sell-offs that could occur in asset classes, just because so many asset classes have been bid up to high levels. There's so much speculation in things like, we saw the NFT craze, we saw the Dogecoin craze. In traditional markets, you see, just tons of securities that are trading at extremely high valuations. And so if we start to get some degree of tapering, or some degree of let's say there's gridlock and there's no fiscal spending coming, and so suddenly some of the justifications for the market to just keep going up and up and up start to not be there anymore, then you could get kind of a broad sell-off in asset classes, which could circle back and touch Bitcoin as well.
This is why I think the part sale of Bitcoin by Tesla is super interesting. I think it triggered some Bitcoiners and thought Elon, I thought you were a hodler. You're meant to hodl forever like the rest of us. And also Elon claiming this was a test of liquidity, which I know. Well, you laugh at it, and I part by it. I was discussing this with Dan Held yesterday. I've got a slightly different theory around it in that I don't think Elon Musk cares about Bitcoin the way some Bitcoiners do. I think he cares about money. He cares about the impact of a crappy dollar or inflation against his ability to run his business. I think that's an important point. I can see why he has the incentive to buy Bitcoin because of that. But I also think his primary concern is Tesla, SpaceX, his various company, and ultimately that whatever the value of the Bitcoin he bought is now. I mean, he bought 1.5 billion. Say it went up to 3 billion. I don't know, whatever. But I can imagine he isn't just sat there like some docile hodler, waiting for a 10-year thesis to play out to sell it. I think him and his team are very much probably analyzing, looking at previous cycles and saying, well, look, this Bitcoin we're holding, it could be flat now. It could go up to 100,000. We should start planning to exit part of our position because we need these funds to run our business. I don't think it's beyond the realm of possibility that he's looking at purely as a trade and how do they maximize this trade over a year versus him being a philosophical long-term hodler.
Yeah, I think, I don't really buy the idea that it was like a liquidity test, because he tested liquidity when he bought it. That was kind of a big test, and you could do metrics to analyze what liquidity should be. I think it goes back to, it's actually hard to say because the funny thing was he only sold part of the position, and Bitcoin was only part of their cash balance to begin with. And so there's actually, you can phrase it in such a way that it's a big position or a small position for them. And what I mean by that is, the funny kind of meme out there is that Tesla made more money by buying Bitcoin once than they made in their entire history of net income of selling cars, because they've always been operating at a loss, or very recently they're kind of in that break-even mode where if you include the tax, basically the credits they get for renewables, they're kind of at that break-even point, and they're starting to report an actual profit mainly from those credits. But they basically made more money, from Bitcoin, from this whole business of selling cars for this whole time. And so it's kind of a funny metric in that sense. On the other hand, they weren't like MicroStrategy, where they, MicroStrategy put like virtually their entire treasury into Bitcoin, whereas Tesla only put a fraction of their cash balance in anyway. And so I'm kind of surprised that they were willing to sell it so quickly, because you'd think that, that Bitcoin's their hedge, that they're just kind of going to let it run. And I figured maybe if it goes up 5x or something like that, they might be willing to sell it. But it's kind of funny that they trimmed it after, kind of a 2x or whatever the number was. I don't even think it went up that far since their buying period, but I could be wrong. I think it's somewhere in that 2x area. And so, we'll see how it plays out. I mean, Elon claimed that he didn't sell his personal holdings. He claimed that Tesla was testing liquidity. We'll see how that plays out. We had another announcement of a company that added Bitcoin to their balance sheet as well.
Yeah, that's at 2% though, right?
Yeah, and I think that's going to be the norm. I mean, that's what Square did. The number of companies that want to be like MicroStrategy, I think, are very few and far between. Whereas, a lot of those companies we talked about before, if CPI is let's say even 2%, and they're getting near 0% on their cash or T-bills, which is where they hold their corporate treasuries, they basically have a melting ice cube. And then there's always the risk that inflation goes up to like 8% one year, and you know what I mean. Like basically there are tail risks to their big cash positions. And so if they put a small percentage into Bitcoin and that goes parabolic, well that kind of defends the rest of their cash position. Yet if Bitcoin goes to zero, then it doesn't really care because they put 2% in. And so that's the risk reward that a lot of those corporations are kind of attracted to.